Welcome to SIRA MCQ YouTube channel. Today we discuss advanced level A-level accounting paper 2025 final question. Again, question means question number 50. Look here. What is the requirement? There are three requirements. Identify the following for this project. There is a project. There's a long-term project. Look here. Initial net cash outflow. Initial means 0 year cash flow. Okay, initial means 0 year, you know, 0 1 2 3 4 5 like that. This is initial net cash outflow. This next one, payback period years. Total terminal means the final year net cash inflow. In that time we must prepare cash outflow and inflow sheet. Okay, we prepare estimated cash inflow and outflow sheet. This is the 1,000, no? Rupees 1,000. Okay, this is the description. This is the 0 year, then other years. Okay, this is the 0 year, this is the description. This is 1 2 3 4 5. There are some years. Okay, let's see the question. Look here. A company is considering to purchase a new machine with expected useful lifetime is 10 years. Oh, look here, there are useful lifetime is 10 years. There is a problem. There are 11 columns. Within 0 year, there is 11 columns. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. No? Therefore, I prepare 1, 2, 3 years, and after this is the terminal year. This is the final year. Okay, there is a 1 2 3 4 5. The middle years are same, like that. I assume. Okay, this is the last year. This is the last year. This is the last year. This is the last year, and this is the middle year. This is the 0 year. Okay, let's see the question. 10 years to replace the old machine. Replacement means we sold the old machine and purchase a new machine. Okay, look here. Next one, the forecasted estimated information in this respect is given below. Look here. Cost of the new machine, cash outflow 0 year, 12,000 is outflow new machine cost. Okay, 0 year outflow. Okay, next one, residual value of the new machine. Residual value was cash inflow of last year, 2,000. Therefore, the residual value of new machine is cash inflow in last year. Last year means 10th year. This is the residual value of new machine. Okay, next one, selling price of old machine. There is a cash inflow of 0 year. You know, at the selling point of old machine we purchased the new machine. Therefore, at the purchasing of new machine, the selling at the current year is 0 year cash inflow. Selling price of old machine, 0 year inflow 800. 800 is 0 year inflow old machine sales. Okay, next one is selling expenses. Expenses means outflow. Selling expenses of the old machine 50. There is at the selling point of 0 year, the old machine, there are some expenses, there are some outflows incurred. This is a 0 year outflow, 0 year outflow expenses. This is a 0 year outflow sales expense of old machine. Okay, old machine. 800 was inflow. Why? We sell, no, we can collect some money, but this is the expense. This is one. Additional working capital, this amount can be recovered at the end, 250. Therefore, additional working capital we must deduct 0 here. After that, this amount can be recovered, no, end of the project, 250. There are two locations there. You must deduct 2,500 from this working capital requirement. But after that, the final year 10, there is inflow working capital recover. This is the outflow, this is the working capital using, and this is the recovered from last year, the 10th year working capital inflow. There are two locations for working capital. Next one, look here. Next one is reduction. Reduction is deduction, no? Reduction of annual operating cash outflow due to the new machine 1000. Look here, reduction, there is a deduction, the saving annual operating cash outflows deducting of due to the new machine. Cash outflows deducting means inflow. You know, there is a expense deduction. Electricity bill is deducting. There is like inflow, no? Expense deducting means cash inflow like low. Therefore, the reduction of operating cash outflow saving means inflow. Okay, therefore 1000 is inflow. This is the annual, no, all years, annual, no, without 0 year there is a annual cash inflow 1000 for all years, and within 10th year is the annual, no, 1 year, no, this is the saving outflows. This is the workings, no. Next one, don't include this 0 year, no. Look here. Next one, increase in the annual revenue increase, income increase due to the new machine 1 to 5. Okay, 1250 increase of revenue. This is the cash inflow, no, revenue increasing, no, 1200 annual, no, annual. Therefore 1250 is all years without 0 year, including this year, including last year. Okay, this is the revenue. This is the answers. Next one is identify the following initial net cash flow. We must find the net effect of this. Net effect, look here, this is the cash inflow and outflow sheet. Initial investment we must calculate using 0 column. We can use the calculator, no? Calculator. Look here, initial investment is 0 year final result. Okay, therefore I use these values, minus 12,000 plus 800 minus 50 minus 2,500. Okay, answer minus 2,500. Okay, minus 12,000 plus 800, get it answer, and minus 50 answer, minus 2,500 answer. 13,750 outflow. This is the initial investment. We can write it. 13,750. This is the initial cash outflow is 13,750 in 1000. Okay, this is 1000. Payback period, yes. Okay, payback period. How can we calculate? Payback period is the number of years we recover the initial investment using annual cash inflows. Look here, we must calculate the annual cash inflows are same 2,250, but what the final year is vary from this. Final year is 675. The other years 1, 2, 3, 4, 5, 6, 7, 8, 9 is same 2,250. In that point, how can we recover these 13,750? At that point, I type in calculator 13,750. Recovering means deducting, no? Therefore, I deduct all this one minus 2,250, answer it. This is a 1 year was done. Second year I recover 2,250 again. There's a 2 years done. Another year recover minus 2,250, answer it. There are 3 years I got it. Okay, 3 years minus again another year 2,250, answer it. There are 4 years got it. Okay, again 2,250 I deduct. 5 years got it. Again I deduct 2,250, again answer it. 6 years done. There are 6 years done. After that, the final remaining must be covered 250. Therefore, the next year is 2,250. No, therefore we can find the months of that 2,250. This is divided by next year, the 7th year cash inflow 2,250 multiplied by 12. We can answer this time 250 multiplied by 12 divided in 250, answer 1.33. It means months, therefore I round it 2 months. What is the payback period? 6 years and 2 months. 6 years and 2 months. 2 months. Sorry, 2 months. 2 months. 2 months. Okay, 6 years and 2 months. This is the payback period. Okay, 6 years and 2 months. Payback period 6 years. 6 years and 2 months. 2 months. Total terminal net cash inflow. Terminal means final year cash inflow. We easily find that total 1. The final terminal means final year answer. Final year answer is 6,750. There is a terminal cash inflow final result. Therefore, we can write easily 6,000 and there's 1,750 cash inflow. This is the answer. This is the end of the question number 50. This is the end of our paper. In next video, we must meet another English medium MCQ paper.